Hello, 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 everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacchino. What's going on with my camera? Huh. That is very strange. Let me try this. No. Same issue. Over here. Something is messed up. 1 second. Let's just do this. All right. That should be better. Sorry about that. Good morning, Patrick. Why is it Happy Fed Pie Day? What am I missing with Pie Day? Pie. Yummy. Morning, Dave. Good morning. Rainy morning. Yes, it is here in Chicago. Good morning, Martinez. Good morning, Jacob. Options 22. Good morning. Well, I was trying because it actually technically switches the camera, but I had to cut it off early. Hey, Money Mike, someone hit the. All right, Chris, you're in charge of these slogans. I'm off today, but had to tune in and see all my friends and hear Mike's thoughts in the FOMC meeting. You want my thoughts so you can get on with your day? There'll probably be a little. There's always volatility right around the rate decision, but it's fully baked in. It's all going to matter to presser. That's it. And whether Powell is more hawkish or interpreted, I should say, interpreted as more hawkish or dovish. Dovish, the market rallies because then we'll get the posy pivot narrative. Hawkish, the market would more likely decline because, hey, they're holding fast. That's where we sit. Now, the market, from just a market perspective based off this rally for the last couple months, has gone into overbought again and is shrugging off any kind of slowdown from, if you just look at it from a fundamental perspective. So, the presser is what matters. And then the week's not over. Why? Because we got Bank of England, ECB tomorrow, and then we have the largest OPEX of the year. 3.6 trillion, I think it is, expiring on Friday. So, we're not done yet. By the way, you got crude numbers coming in at 9:30, which all crude traders should know. There was nothing really interesting with the mortgage numbers, but everything 1 p.m. Central, 2 p.m. Eastern, the rate decision, we're going with that 50 basis points. That's not changing. The big thing is 30 minutes later with the press conference. So don't get caught off guard with the press conference. You see here our market map, besides Pfizer down 4%. Comcast, yes, I am free of Comcast, almost 4%, but everything's flat. Apple down a little, Microsoft up a little. We're flat. Home Depot, little, nothing much. Nothing much there. Tesla looked like it was going to gap down again. You see here just very, very flat markets. Very, very flat markets. Unless something comes out of the blue before the presser, there'll be some back and forth price action. But unless something comes out of the blue on a headline or something really shakes something up, I'm not expecting much before the announcement. You see here, still that 80%. I'm surprised this hasn't climbed more. Very shocked this hasn't climbed more, but that's enough to bake in that 50%. He's not going to shock the market. And we're still in greed mode. There, we're done. By the way, look at the gamma. It's sort of funny. 4031 is right where the gamma flip is. We're roughly right at neutral gamma. So any substantial sell-off takes us in a negative gamma, which can amplify even further the sell-off. Any rally has a deadening effect. Why dealers have to will sell into the rally, especially with the rapid changing gamma with 2 days to expire. Well, just under 3 days to expiration. So I'm still putting that up there. Nothing before the open today. Nothing before the open, but after we got Adobe. I mean, it's minor, but it's still an interesting one. Given rate hike Wednesday, it's going to be very minor, but I'm paying attention to it. And then nothing really tomorrow. Nothing really tomorrow. Let's see where we sit. Where are we sit? We're Rich says end of year sell off rally. What's a sell off rally? Is it a sell off or a rally? Or are we selling off from this rally? I had mindless confidence yesterday. I don't think it would break down the way it did. Unfortunately, I never set my lower levels. You gave us the upside of both, but not the downside levels. Sorry about that. I'll give them both today. My major level, 4,013. And then we start going below there. I'm using the harmonics. My key line of the sand has not changed. I cannot get aggressively short until we get below this 39.12. Minorly short gets when we get below 40.13, especially on a closing basis, to re-tackle the now between the 87.5 and 100, which is 39.47 to 39.14. It's based off this last little swing, not the low of 39.12. And with the 50 right in the middle and the channel line. If you go shorter than that, I mean, you can work off these little ledges intraday. 40.24 will be 40.24 to about 40.20 will be minor. To the upside, besides still utilizing this, which 40.85, 4100 right now. Key will be on a rally. If it pops back up, 41.13, and then I'm going to 41.44. Let me just fine tune that. Why here? You can watch this little area right in here around the target still for the double, 40.85, and then 40.93 if you need very minor levels. And then we don't have much up until the 41.43 key area. What I would do if we start in rally mode, also put on your reverse harmonics, and the key level for a closing basis is 41.22. So that's where that stands. NASDAQ. The key levels I am utilizing the minor. Here, let me get this up here. I'm trying to get it without so many lines on the screen. Minor will be 11,880. Line in the sand, 11,766. We got a cluster at 11,646, 11,650, which I would not ignore. And then you have the return to the lows from the December 7th. 11,422 to 11,537 are all the downside levels. To the upside, 12,072, and then the next major, 12,139. On the closing basis, 12,154.50. If we get a close above there, I'm targeting the 12,227 to 12,339 area. So you have your minor levels and then the key closing level. For your spiders and the Qs, to the downside, there's still a little potential gap magnet, 398.95. That's where I'll be watching for key support. We break below there. That's where I'll still utilize the harmonics. The key closing area is 398.71. You get below there, 396.35 minor, which is actually interesting enough. The sort of a little minor breakout level with the 21, then 394, then 391.64. 391.64 is key because it's also the 50-day. A close below that also triggers this double top. And you still have the gap left behind from going into Wednesday to CPI Thursday in November. So that's the key line in the sand. To the upside, the best bet today, besides we're gapping down slightly, so 401.97, we're right there, roughly flat. But I'll be using the upside harmonics, 403.42, 405.78, 408.13 for any rally targets. If we do break to new highs, let's say we rallied up, break to new highs, I'm still keying off these harmonics from before, 415, 15, 420, 30. So that should give you not only levels for today, but going into technically the next couple days. 288.42, closing is 288.65, so just below that, there's still a minor full gap fill magnet. 285.58. Key line in the sand on a closing basis, 285.57 on the Qs, which interesting enough, the full gap fill 285.58. So you have that just a strange enough harmonics lining up with another key level. 283.30. Then we get 281.04. I just key off of 281. Then 278.78. This key areas to breakdown where I'm watching on a closing basis would be the lowest close since CPI Thursday. And you see the lowest close before that was 280.57. 280.57 is if we do sell off is what I'm watching on a closing basis for a further breakdown play. Same thing here. I'm still utilizing the harmonics to the upside. So 290.09, 292.35. Major cluster area 294.34 to 294.61. On any rally, I'm not using the minor harmonics. I'm still using the areas, and I consider this target hit for the first thing. That's what's aggressive stop raise. It's 303.72 is the major target area with the declining 200. So that's about it. The Dow just do the same thing. The key closing area is 34.118. We get below that. 33.674 to 33.452. We break. I'm watching if we do break lower, and this isn't just for today, would be targeting the 50. To the upside, it's really 34.562, 34.780. 795, 35,000. And then through that, I'm still using 35,734 in my major target area. Don't forget to the upside, 35,807. The Russell. The Russell gap up today. Against the 200, we get through this 1857 area. I'm targeting 1880, little breakdown area, and the harmonic. Above there would be yesterday's high, 1890, and then the real topping area back to 1905. Support with this gap up. I'm watching for the support from yesterday's close. Yesterday's close, 1834. Then below that, this is where I'll use these little run-up harmonics from this little area to watch 1828. And below that, if we get the close below that, 1803 to 1791. DAX, still on a closing basis, is this 14,607. On a key support basis is 14,200. Other than that, we have We have ECB coming up tomorrow, so that's probably going to be the bigger driver for anything there. Notes. Major targeting area is 115.14. Minor above there would be 115.21, then 116.13. My key support, I will use the harmonics in here. On a closing basis, it's 114.10.5. We start breaking below that and get a key close below that, then it's a retest of the lows and the bottom of the daily rotation zone. Remember, we start breaking below that. We have a gap left behind to 113.07, which is also right in the vicinity of the 50. So that's what I'm watching. Anywhere, just a reminder, up in here is a major topping area between these two red lines. So between this 115.14 roughly and 117 is a major area I'll be watching for a top. Dollar index, very narrow range so far. I'm keeping an eye on two things. First, potential double bottom. Need at least a 1 hour close below 103, above 103.71. Targets 104, 104.14, 104.28. And within that context, the bigger double is still not off the table. And the rotation zone getting out of the way. Does that mean it might never trigger? If we roll over today with the rate hike decision, then that will be off the table. But those are the key things I'm watching. The upside to the, and we're in a pretty key support area. But to the downside, if we break lower, the next major area isn't to 102. VIX, pretty this morning. My key level is 2150 to the downside, and to the upside, right around 24.12. Crude through the next target of 76. So I am watching right now the 77.60. I can't maintain more bullish on a trailing level unless we get the close above 78.37. So everything would be trailing from the percent B buy, with cycles still a little room left to run up against the daily rotation zone. But I am watching for a topping pattern in here unless we get that daily close above 62.5. Let's just jump to gold real quick. Gold, this, by the way, the double is off the table, so it would just be a breakdown level. And the breakdown level bumping down a little to 1780, and you still have the gap left behind. So the double is potentially off the table, but on a strong rally, 1843, and then roughly about 1850 are my targets to the upside. Still holding the daily rotation zone. Euro and pound. Key support in euros 105.50. It's into a significant potential topping area up here with ECB tomorrow. So that's why I'm watching for the breakdown area. I'll start focusing more on is below 105.50. The pound on any rally, it's into a major resistance area, but a next rally target would be 10. Then there's Bank of England tomorrow, 102.50. And then the major target area is 127.85, which is key for the 62.5 harmonic. Bitcoin, continued little bounce rally, watching for another setup. Sell in that, but nothing yet. Tesla, pre-market looks like another gap down, or is that we closed gap down, but not yesterday, below yesterday's lows. Minor target area 155. Next key is 148. Any rallies, 175 is your first level of resistance, then about 183.50. I'd even go lower than that. I'd go to about 180.60. That's that's nearly off. It's that crude might be off the table, but you can watch for the potential little double top below about 74.90. If it rallies much more, it's off the table. So that's a great little area for a trailing stop. Thanks for putting in there that, Jake. Well, see, it's the, where were they? I have a question, Sterling. Yeah, how long ago was all that stock? I mean, we've been talking about that forever. I mean, and that was it. It hasn't. They're so late to the party. Why don't they do anything more so like they're late to the party. And now they're like here to clean up. Well, what about all the people who got crushed because see, it's all just a joke. Like even and this should be of no surprise, we've talked about this. It's like the regulators are there just to, oh, look, we cleaned it up after it's all over and things have collapsed. Okay, well, where were you to enforce the rules while it was going on? Yeah, I know it's insane, but they're just celebrating. It's what I said yesterday. People aren't trading the markets; they're trading the Fed anymore because they're still ingrained with the Fed put. The Fed's going to cut rates. We're going to go back to cheap, funny money, and we're going to go back to rah times where it's cheap borrowing, and you can just fuel growth with borrowing dirt cheap money. So earning, the financials and fundamentals don't real matter. Let's go back to the ARC rah days. So let's just see. Maybe I'm just out of touch. I've never seen or heard of these names. Just don't put me in the conversation with me, Kevin. Don't put us in the conversation with Meet Kevin. Let's see. I know many futures will capture yesterday's pre-market spike, and would you use yesterday's QQQ spike as 3080 as a high I will not ignore yesterday's high spike of 380. The high, I will not utilize that pre-market. I will ignore the pre-market spike. Okay? If you need minor levels for the Qs, you are better to use your harmonics than the pre-market. So if you break above yesterday's official, market was open high print of 296.87, 299.13, 301.39, and then the 303.73. Those are your levels I personally would utilize if it breaks above today's high. Okay? Now, for any double patterns, for the Qs or the spiders, you only want to use market open to market close data. You don't want to use pre-market. So, oh, thank you, Sterling. Thanks for measuring that out. So the crude double top is technically off the table. Yeah, it's trading. The Meet Kevin ETF is trading. By the way, I will not be doing an ETF. You will not see, although if I was going to have an ETF, it would be called FDUK. We'll have the Falling Duck ETF. FDUK will be the name. Not planning on launching an ETF. Not interested. By the way, we're 1 minute to the open. Should be quiet. Again, don't get chopped up. Don't do something silly going into the announcement. Go, Kathy. Oh boy, just what a mess. I mean, if people rode this, there are people who've ridden this all the way down. That's just sad. It's just sad. And this still has lower to go. Oh well. Okay, everybody, have a fantastic trading day. I just want to peek in at the futures open. Let's see, futures open. See, this is area. Yeah, you have a little clear path, but we have stopping points. I mean, I'd be watching for quick reversals with trying to fish for some liquidity out here from the traders. So I'd be watching more for re-tackling these key levels and then quick little reversals personally. I just want to check in at the where the tick is. Look at that. Tick slightly down, but pretty friggin' flat. Yeah. Sit on hands. S&P slightly up. NASDAQ slightly down from yesterday, but nothing. Again, better days to go research other longer-term trading opportunities should they set up. I shall talk to everyone later. Bye for now.